Well, oil prices climbing nearly 4% this week, with crude breaking a 3-week losing streak, posting its best week since April. Joining me now with her forecast about where prices are heading from here is Helima Croft of RBC Capital Markets, also a CNBC contributor. Helima, happy Friday. So what's been the biggest factor driving this oil surge, both? Is it likely to continue?
I think the market has gotten over the taper tantrum that occurred right after the OPEC meeting, when a lot of market participants really went into that agreement and looked at the fact that OPEC said that they could potentially start bringing some barrels back in Q4 and then bring in more next year if market conditions could accept those barrels. And a lot of people went to OPEC's going to overflood the market. I think now there's a view that if the market is on shaky grounds, OPEC is not going to start phasing in those barrels. So now we're focused on the likely inventory draws that we're expecting in Q3. So we're expecting about 850,000 barrel a day inventory draws. Other shops have higher draws forecasted. So I think that is part of the reason why we've had this recovery in prices. And so again, I think it's more of a sense that this market is likely to get tighter as we go deeper into summer.
So what about the impact of the turmoil in the Middle East?
Well, this is so interesting, John, because the market has essentially faded all geopolitical risk in this market. If you ask why oil prices have been softer as of late, once you had that Israel-Iran dust up, the market said, you know what, we didn't get a bigger war. I'm going to move on from that story. But I would say there is this story that we should be paying attention to. We should be watching what is happening on Israel's northern border. We've had a very serious escalation in terms of cross-border rocket attacks between Hezbollah and Israeli forces. And there is real concern in Washington, where I am now, that this could be a potential pathway to a wider war, given Iran's staunch support for its most important proxy, Hezbollah.
There's a lot of shrugging off of things happening. I'm looking at the VIX still under 13.
Yes.
I mean, it's practically asleep, although you could argue it rolled over up 6% today. What sort of thing tends to shift investor sentiment, and whether geopolitical factors and the impact on oil might suddenly be relevant?
So I think what the market is saying right now is we want to see that there's actually some physical risk to supply. And again, that's why we had this sort of run up earlier when we had the actual back and forth between Iran and Israel, because there were concerns about potential closure of the Straits of Hormuz, potential attacks on Iranian oil facilities. And when that didn't happen, everybody said, I'm done with that for now. But again, why we say focus on Lebanon is that experts in this town who have been following the Middle East for decades have said Iran is pretty clear that they're willing to lose Hamas or the Houthis, but Hezbollah is their most important asset. And so if you do have Israel rolling tanks across the border, something similar to what we saw in 2006, there is real concern that Iran will become involved in this conflict in a much more meaningful way. And that's why you have senior Biden administration officials on their way to the region to try to prevent this flashpoint from erupting.